What's going on, Patreon? Welcome to a post-market analysis here for the overall Forex market. In the pre-market analysis, we said we wanted to see it reach up higher prices back up into this bearish fair value gap here on the weekly. I did not necessarily want to see it close, definitely not above the 50% or even get up there, but it did so. So that's a little worrying coming into the marketplace tomorrow. Right, for sure that's a little worrying, but we do have this bearish weekly order block as well at these highs that could pose as a potential resistance for a retracement tomorrow. So looking at the marketplace for Monday, Tuesday, Wednesday, Thursday, right, and for Thursday today we have been making higher prices, and as you guys may know, in the marketplace, when you have been making higher and higher prices throughout the week, that Friday tends to be what's called a TGIF, right? TGIF, if you've been making higher prices throughout the week, that Friday could see a retracement lower. So that's what I'm anticipating tomorrow morning coming into the New York session. I'm anticipating some type of TGIF at these higher levels as we reach up into, looks like it's reaching up into this bearish breaker here, right? High, low, higher high, we broke below it. Looks like it's reaching back up into that bearish breaker level. So it's going to be very interesting to see the marketplace tomorrow morning. And coming into the marketplace today, we didn't necessarily get much of an opportunity, right? As you guys can see here, there is something that I can learn today, missing out on this move higher, and that is to take more chances, right? As we can see, coming into the 930, we opened up and we dropped lower. I was looking at longs down here. So I was looking to take a long literally at the bottom of this uptrend higher. But the reason I did not take a long was because it was 930, right? And yesterday, and I essentially told myself I'm not gonna take a trade at 930. I'm gonna wait till 945. So I said I was going to wait until 945 because yesterday I took a short at 930 right here, and that short ended up being a loss, right? I took a short inside the bearish fair value gap, and it ended up wicking me out and faking me out essentially. So because of yesterday's loss, I told myself not to take a trade until 945. That happened, and I completely missed out on this push move higher. And at this point, it was too far extended. I wanted to see a deeper retracement, right? You see how we opened up here on the 15-minute, but gave a slight push lower. I wanted to see a deep retracement. So I wanted to see a deeper retracement at the opening here. It did not give a deep enough retracement. I wanted to see it at least like down here a bit. It did not give so, and it immediately ran without me and ran without me. And by this point, as it was up here, it was already gone, right? I do not trust taking a long as the market has already pushed higher, because you never know what can happen, right? You always want to stick to your plan. You always want to stick to your model. This is not how I trade. I'm not in the game of chasing price action. And this is why it's very difficult during these trending days, and why most times I miss out on moves like this during trending days, is because I don't know where to get in. Price does not give me an opportunity to get in. Any regular day, price will give a push and then a retracement for that continuation. Any other day, 9 times out of 10. But during a trending day, price just sees a higher move. I'm waiting for some type of retracement. Price does not give that retracement, and I end up missing the move. And this is why trending days is very difficult, right? Because I see price moving higher and higher and higher. I don't get an opportunity to get in, and I completely end up missing the move. Something that I could have done and could have learned from is this right here. I saw this bullish fair value gap. I did not take this bullish fair value gap long because, once again, I was fearful. But I have to understand, when price is trending and we have a fair value gap here and we have these fair value gaps down here, right? Price is not going to come all the way down here into these lower fair value gaps. It's going to come into this one and then continue higher. When the market's trending and when it's going higher, it is in a hurry. And what that means with the market being in a hurry is it's going to see little to no retracements and just continue going higher because it has somewhere to go. The market has somewhere to go. It has to get there by a certain time. So it's going to what's called spool, where it's just going to go higher and higher and higher and higher and give little to no retracements. I should have taken the risk at this bullish M5 fair value gap. I was fearful of taking it at this bullish fair value gap because I wanted a deeper retracement, but I should have taken it and I completely missed out on that trade idea as well. So something that I learned today was, right, I can allow myself to take a trade at 9:30 if I'm confident in the trade. I remove that because of yesterday's loss, but because I removed that, I missed out on this big move. It's a double-edged sword, and I have to what's called bite the bullet, right? Meaning this rule is right. I don't trade until 9:45. Yes, sometimes I'll take a loss, but at a lot of times you can catch really massive wins, right? Trading at 9:30. So it's a double-edged sword that I have to bite sometimes. If I see an opportunity at 9:30, I have to take it. I did not see this fair value gap down here. I was looking at the 15-minute. I was not looking at the 5-minute at the opening, and that's something I am going to improve on as well, is having another screen looking at the 5-minute, not necessarily entering off of the 5-minute, but looking at the 5-minute just to see if there's any lower time frame fair value gaps. As you can see on the 15-minute, there was not a fair value gap here or any PDRA, but on the 5-minute, there was. If I saw this on the 5-minute, I definitely would have took the trade. So I definitely want to be aware of the 5-minute, not necessarily take much trades off of it, but it has to be in alignment with my bias and the 15-minute. So, right, so looking at the 5-minute, that's one thing that I can get that I learned today, right? Looking at the 5-minute, because there might not be an opportunity on 15-minute, but there might be one on the 5-minute. So using the 5-minute, and then next is taking a trade at 9:30 if you're confident, right? We saw a power of three, right? Asia consolidated throughout London and New York session opening here at 7, right? We've been consolidating and coming into market opening, boom, rip higher. That is a power of three. I saw that. And I should have taken that 9:30 trade higher because I knew we were inside that power of three. So taking that trade at 9:30 and taking more chances inside the marketplace. Seeing the marketplace push higher and higher and higher, I should have taken this trade here inside this bullish value gap, anticipating that it would continue higher. I should have taken that chance instead of being fearful. So these trading days are very difficult because it's not typically what we see inside the marketplace. Usually inside the marketplace, it looks something like this, right? We have a push higher retracement, and this was actually a long that we took yesterday. Push higher retracement where we went long, back up into these highs. Push higher retracement, back up into these highs. This is what we typically see inside the marketplace. During these trending days, it kind of just goes higher, 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 higher. Like it's very fearful to chase higher prices because you don't know when it's going to reverse. So, going forward in the future, I have to take more chances during these trending days, um, just as a, future lesson so I can stop missing out on these massive moves because these trending days give a lot of opportunity and more so often than not, I miss out on these massive opportunities. So if I can learn from them anytime they come around, because they come around every once and now and then, right? These trend days, they come around. I can now learn from this, and in the future, I can hopefully catch the trending move and get better as a trader. So today ended up going higher. While we didn't end up getting much of an opportunity, we did short right here. We did short right here. Stop loss back up here. We did get out early, which was completely our fault. We got out early here. No, we shorted, we scaled in, and we ended up taking our right. We ended up taking our trade off right here for a small loss, like 5 points. We ended up taking our trade off right here because price came down into this 5-minute order block, right? This was already a low probability trade, right? You don't want to be shorting a trending day, right? This was already very risky. So seeing price come down into this order block and then giving that rejection higher, and it came back into my entry, I said, screw it. I'm not going to try and short a trending day. I'm going to walk away. Right? I got stopped. I took the trade off for 5 points, basically break even, and then it eventually went lower down into my target. So I mean, even though it was a break even trade, I'm not going to say I should have held it or I should have maybe stayed inside the trade, because at the end of the day, it was low probability, right? I am trying to short the trend higher for a retracement move. It did give a good opportunity, right? It did give some good signatures, but at the end of the day, it was really risky, and I'm not in the game of trying to short the highs or catch the top. So I ended up just taking it off for break even and just walking away, because there's always tomorrow, and there's always next week, and there's always next month. I'm not going to put, my capital at risk trying to short the highs when I know that there's tomorrow and next week that I can get a better opportunity. But yeah, today was very difficult, just seeing the market push higher and higher and us not being able to capitalize on any of it. Very, very difficult. But that's just how trading is. You're gonna miss out on opportunities. As long as you can forgive yourself first, right? Forgive yourself for, okay, I missed out on an opportunity. I'm not going to beat myself about it. It is what it is. And then you learn from it. How can I get better so next time I don't miss on this opportunity? Next time I'll look at the 5 minute and see, right, is there some type of 5 minute PD array that I'm not seeing on the 15 minute? I also learned that taking a trade at the 9:30 opening, that's okay, as long as I understand that I'm aligned with my bias and where I'm going inside the market direction, and understand it's a probabilities game. And then third, taking more chances, taking the long here inside this bullish or VAG gap instead of being fearful. So I learned from this mistake today. And third, right, I focus on the next day, focus on, getting better as a trader. It's not about today. It's not about tomorrow. It's about, at the end of the month and at the end of the year. This week has basically been a 1 hour week for me. I'm only 1 hour. Very difficult week, primarily because there hasn't been much news until today. And even when there was an opportunity finally today, we weren't able to capitalize on it. That's just the um, inconsistencies, of, traders. Some days, are good, some days are, right. These days weren't that good, so we didn't see much opportunities. But on this day was a good day. We just weren't able to capitalize on it. And, that's just how trading is. You're not going to win every single day. You're not going to win every single week. Um, you just have to get better and learn from it and, improve. So we are up about 1 hour on the week. So hopefully we can get some type of short during that TGIF so we can, really maximize our profits for the week and hopefully get at least a 3 hour or a 4 hour. If we can get a 3 hour tomorrow, that'll put us up 4 hour for the week. If we get a 2 hour tomorrow, that'll put us up 3 hour for the week. So looking here on the dollar, we talked about this daily bear shorter block here on the dollar, that daily last up close candle, bear shorter block. We reached up into that level, as well as this H4 bear shorter block here on the dollar as well. And this morning we were talking about lower dollar, right? We saw this SMT, not SMT, but liquidity sweep came up, swept these highs, and then at 8:30, we saw this push to the downside. Right, we said the dollar was pushing lower and lower, and we could possibly see a continuation lower on the dollar. We also said it could possibly find support here at this volume bounce level, but ultimately it should continue going lower, and that's exactly what happened. Today ended up being, right, almost a reversal, right? We still have Tuesday and Monday's low. I think we could maybe continue seeing lower prices on dollar potentially, but that's what we're seeing. We could potentially see lower prices on dollar continually. So coming here on Euro USD and GBP USD, right? We talked about how there was a SMT at the lows, right? Where GBP took out these lows, the weekly lows. No, it was these lows down here, all the way back here. So the weekly lows down here, GBP took out, but Euro didn't. Look at these lows. They're all the way down here, and Euro's all the way up here. So GBP took out those lows, but Euro didn't. That's a massive SMT divergence. And obviously you can see here 830 we 830 we saw this push higher. Price came down into, looks like, the 25%, close to the 25%, right? Found support here, pushed higher, and just continued pushing higher and higher prices. Came down into this fair value gap here once right here, and continued seeing higher prices. So Euro saw a massive push higher. GBP also saw a massive push higher. GBP was a little more stagnant, or choppy, right? Euro kind of just pushed higher and higher, higher. GBP gave retracements. So GBP actually looks solid. It actually gave really good retracements. This is what I was looking for today on the Dow Jones. Like if Dow Jones gave retracements like GBP did, I would have 100% caught these longs. You see, this is what I like, right? We pushed higher, gave retracement, push higher, gave retracement, push higher, I like this. I don't necessarily like when we just push higher, slight retracement, and just continue going higher. I don't necessarily like that. This was very solid. So GBP was very, very solid. Obviously, on the 15-minute time frame, MMXM model, we came lower, swept these prior daily lows and prior weekly lows. I mean, the low of week. Obviously, we saw this breaker structure to the upside. This is a breaker. High, low, higher high. We came down into that breaker plus fair value gap level. That's a unicorn model. Long right here. I probably put my stop loss just below that breaker and the low end of that fair value gap. Right, low end of that fair value gap. Turning back up here. And as price came down into that breaker and fair value gap left it, right, as you can see here, as we closed higher, I would have scaled into my position, 100% scale into my position and move my stop loss below that low, because as price comes down into that fair value gap and breaker level and then leaves it, this is now a strong low, right? This is an intermediate term low because this is the low that tapped into the PD array and left it. So if we have a bullish fair value gap here, this low comes down, taps into it, and then leaves it, this builds structure, higher highs and higher highs. So this is now structure being formed. So as we leave it, we can add to our position, putting our stop loss down here, anticipating structure to continue seeking higher prices. So, right, this is why it's very important to add to your positions and scale into your positions once you gain confirmation, so you guys can make more on your trades, right? And dollar, we talked about dollar, not dollar, but gold. We talked about higher prices on gold since Tuesday. We said Tuesday price gold was gonna find rejection here at this bearish order block. And we had this bullish for value gap below us. It came up to that bearish order block, found rejection, came down to that bullish for value gap, like we said, and then after it tapping into this bullish for value gap, we said that our next area of targeting is back above these highs, right? The high of week. And today we saw this happen. So wow, look at that. Very, very solid. Very, very solid. Looks like we came lower and took out the Asia lows. So this is Asia lows. So we came lower this morning around 5 a.m. and we actually around like 3 a.m. London session, but we came lower once again at 5 a.m., taking out the Asia lows. And then coming to our marketplace here at 8, we saw this push higher. So obviously we took out sell side liquidity. Plus our narrative was higher prices. Our narrative was higher prices back up into the high of week and the prior weekly highs. That was our narrative for gold this morning. Right, if you saw this push to the upside at 8:30, right, coming into the marketplace here 9 o'clock gave that retracement into, what did it give a retracement into? This 1 hour fair value gap. So boom, as it came down to this 1 hour fair value gap, right? And even this 15-minute order block level right here, this last uncle's candle on the 15-minute. Even, wow, there's a lot here. There's also this breaker. I didn't even notice that. So we have this high, low, higher high. Breakers are very powerful, guys. You guys want to use breakers. So we have this high, low, higher high. Price came down into that 1 hour fair value gap plus 15-minute breaker. As soon as we see price right close higher here, I want to immediately take longs, right? As soon as we see price close higher here, targeting back above these highs, right? Because our narrative was already higher prices. We already wanted to see higher prices. We got that retracement inside of the marketplace down into these bullish PD arrays. Now we're seeing signatures that it wants to leave it. So I'm definitely going to take, right, the longs here, targeting back above these highs. And we even reach up into these prior weekly highs as well. Gold doing exactly what we said it would. Gold's very, very solid. I might actually, I know I say this every day, like I might start trading gold, but I might actually start trading gold, or at least looking at it. Because gold, it just does what I said it wants to do. So I really like gold. But yeah, that's about it for pre-market, post-market analysis. I'll see you guys tomorrow.